Welcome back. Today, we are taking a deep dive into the semiconductor landscape, specifically focusing on a company that sits at the critical intersection of national defense, artificial intelligence, and global telecommunications. That company is MACOM Technology Solutions. We have analyzed their annual reports from 2021 through 2025 to construct a comprehensive picture of their evolution, their financial health, and their strategic trajectory. This is not just a look at stock prices. This is a fundamental analysis of their business over the last 5 years. Let's begin by understanding what MACOM actually does. They are not a consumer brand you will find on store shelves. Instead, they design and manufacture high-performance analog semiconductor solutions. Think of them as the architects of the invisible highways that move data. Their chips and components are used in 3 primary markets: industrial and defense, data centers, and telecommunications. Over the last 5 years, we have seen a fascinating shift in how these 3 pillars contribute to their bottom line, reflecting broader global trends like the AI boom and rising geopolitical tensions. Let's rewind to 2021. The world was still grappling with the immediate aftershocks of the pandemic. In fiscal year 2021, MACOM reported revenue of roughly $607 million. At this time, their story was about stability and operational efficiency. They were focused on high-performance analog and mixed-signal circuit design. A key competitive advantage they highlighted back then, which remains crucial today, is their status as a trusted foundry accredited by the U.S. Department of Defense. This allows them to manufacture sensitive components for military applications right here in the United States, specifically in Lowell, Massachusetts. In 2021, the industrial and defense sector was already a strong backbone for them, representing about 46% of their total revenue. Moving into 2022, we saw the company begin to flex its muscles. Revenue climbed to over $675 million, an increase of over 11%. This was a year of significant profitability on paper, with net income skyrocketing to nearly $440 million. However, as investors, we must look closer. This massive jump wasn't just from selling chips. It was heavily influenced by a one-time tax benefit and a gain from selling an equity investment. Operationally, however, the growth was real. Their gross margins expanded to over 60%, showing that they were not just selling more, they were becoming more efficient at making their products. This was the year the telecommunications sector surged, growing nearly 29%, driven by 5G deployments and infrastructure upgrades. Then came 2023, a year of strategic pivoting and distinct challenges. Revenue dipped slightly to around $648 million. Why the decline? The telecommunications market faced a significant headwind, dropping 24%. We saw a slowdown in 5G infrastructure spending and weaker demand in China. But while telecom struggled, MACOM was busy planting seeds for the future. This was a pivotal year for acquisitions. They acquired linearizer technology to boost their subsystem expertise and, crucially, they acquired the assets of OMMIC SAs in France. This European expansion gave them advanced capabilities in gallium nitride, or GaN, and gallium arsenide, or GaAs, technologies at very high frequencies. They were preparing for a future where speed and power efficiency would be everything. Now, let us look at 2024. This is where the narrative starts to shift aggressively towards data centers and defense. Revenue rebounded to nearly $730 million. The company completed the acquisition of the radio frequency business from Wolfspeed. This was a major strategic move. It expanded their portfolio in GaN on silicon carbide, a technology essential for modern radar and high-power communication systems. It solidified their commitment to the industrial and defense market, which remained their largest revenue contributor. But underneath the surface, the data center engine was warming up. As AI applications began to demand massive amounts of data processing, the need for MACOM's high-speed optical connectivity products started to accelerate. This brings us to the fiscal year 2025, ending in October. The numbers tell a powerful story of explosion in demand. Revenue surged to over $967 million, a remarkable 32% increase year-over-year. Let's break down where this growth came from. The data center segment grew by a staggering 48%. This is the AI effect in action. MACOM provides the high-performance analog chips and photonic components that allow data centers to operate at 800 gigabits and even 1.6 terabits per second. As cloud providers upgrade their infrastructure to support machine learning, MACOM is selling the picks and shovels for this digital gold rush. Simultaneously, the industrial and defense sector grew by nearly 20% in 2025. With geopolitical instability rising globally, defense spending has increased, and MACOM's position as a domestic, trusted supplier has never been more valuable. They are providing critical components for radar, electronic warfare, and secure communications. However, if you look at the bottom line for 2025, you might be shocked to see a net loss of $54 million. Does this mean the business is failing? Absolutely not. This is why reading the 1OK is vital. This loss was primarily driven by a one-time loss on extinguishment of debt amounting to over $193 million. Essentially, they restructured their debt, exchanging old convertible notes for new ones. This is an accounting charge, not an operational failure. If you strip away these one-time financial engineering costs and look at the operating income, the business is generating healthy cash flows. In fact, cash flow from operations in 2025 was a robust $235 million, up significantly from the previous year. Let's talk about technology. Throughout these 5 years, MACOM has doubled down on compound semiconductors. Unlike traditional silicon chips, compound semiconductors made from materials like gallium nitride, GaN, and indium phosphide (InP) can handle higher frequencies and higher power levels. This makes them indispensable for 5G, 6G, and military radars. In 2025, they highlighted their leadership in optical technologies for data centers. They are not just selling commodity parts. They are selling highly specialized, high-margin components that are difficult to replicate. However, no investment is without risk. We must consider the challenges outlined in their filings. First, there is customer concentration. A significant portion of their revenue comes from a limited number of distributors and OEMs. If a major data center customer decides to change their architecture or switch suppliers, it could have a material impact. Second is the geopolitical risk. A substantial portion of their revenue still comes from the Asia-Pacific region. Trade tensions, export restrictions to China, or supply chain disruptions in Taiwan could severely hamper their ability to manufacture or sell products. We saw this risk materialize in 2023 with the telecom slowdown, and it remains a constant threat. Another risk factor is integration. They have made several acquisitions recently: Wolfspeed's RF business, OMMIC, Linearizer. Integrating different company cultures, manufacturing processes, and supply chains is difficult and expensive. While these acquisitions look great on paper, the execution risk is real. They need to prove they can squeeze the expected synergies out of these deals in the coming years. Looking ahead to 2026 and beyond, MACOM seems positioned to ride two massive secular waves: the rearming of the Western world and the build-out of AI infrastructure. Their fab-lite manufacturing model, where they keep critical proprietary manufacturing in-house, like in Lowell, while outsourcing high-volume production, allows them to be flexible and manage costs effectively. In conclusion, the story of MACOM from 2021 to 2025 is one of transformation. They have evolved from a company recovering from the pandemic into a strategic powerhouse, focused on the highest value sectors of the semiconductor market. They have successfully weathered the downturn in traditional telecom by pivoting hard into data centers and defense. While the 2025 net loss headline might scare off casual observers, the underlying data reveals a company with accelerating revenue growth, expanding margins, and a product portfolio perfectly aligned with the technological demands of the next decade. As always, keep an eye on how they manage their debt and integration costs moving forward. But the fundamental engine of this business appears stronger than ever.